Every year, for those that qualify, taxpayers receive a child tax credit when filing their taxes. Historically, this amount was $1,000 per qualifying child, and a few years ago this increased to $2,000. Just this last spring, Congress passed the American Rescue Plan. Part of this bill provided a temporary increase to this credit, but with a unique feature of sending amounts to taxpayers during the year. For the 2021 tax year, the credit has been increased to a total of $3,600 for children 5 and younger, and $3,000 for those children ages 6 through 17. The IRS is paying out half of the child tax credit in advance to help families get funds faster. This advance is scheduled to begin going out in monthly payments starting this July 15th. This means you could be getting up to $300 per month for children 5 and under, and $250 for children ages 6 to 17. So will you be getting an advance payment, and how do you know if you're eligible? The IRS is looking at your 2020 return to determine qualification. If you qualified for the child tax credit based on your 2020 return, you will likely be getting this advance on the child tax credit. On 2020, you were eligible if you had dependents ages 17 and under, and if you met income requirements. For 2021, the income requirements changed slightly and are as follows: $75,000 for single and married people filing separately, $112,500 for head of household, and $150,000 for couples filing jointly. The phase-out reduces the credit by $50 for each $1,000 by which your modified adjusted gross income exceeds these income thresholds. This phase-out is on the additional credit available for 2021, and then the remaining $2,000 credit is subjected to the phase-out similar to the 2020 income thresholds. If you met the qualifications in 2020, you are automatically enrolled in the enhanced child tax credit payments coming out. So it is up to you to opt out. So why would anyone want to opt out? Just like the stimulus payments that were sent out over the last year, this is an advance on a credit that's going to be reported on your 2021 tax return. But, and this is significant, this advance must be repaid if it is not actually due to be credited on your 2021 return. Because of this requirement to repay any excess advancement, being opted into advance payments may not be the best fit for everyone. If you normally owe, or if you're worried about owing when you file your 2021 taxes, this is a legitimate reason to consider opting out. These are advance payments, as we said, so technically you'll have less credit to offset any tax liability that you have when you file your return. And if you already pay a lot in your taxes, or your income is over the thresholds, this could mean you end up having to pay even more when you file your next return. For example, your 2020 income decreased severely due to COVID-19 shutdowns, which qualified you for the 2020 child tax credit. Now in 2021, you may be returning to work and your business is picking up again, and your 2021 income may be significantly higher than 2020. Which could cause your income to exceed the income thresholds, giving you a reason to opt out. Perhaps you qualify now, but life happens. You know you qualify, you know you meet all the requirements, but now life has taken a turn. Perhaps you got a new job and your income has increased. Perhaps you share joint custody of your children and you claim dependents one year and not the next. All of these changes can affect the possibility of owing money back on your tax return. If any of these scenarios become a reality for you, opting out of the advanced payment may be the right move. Even if you qualify today, there are still 6 months left in the year and life happens. It may not be the first thing you think about, but it should be considered, as doing nothing could have unexpected results on your 2020 tax bill. Or maybe you like big refunds. We know some of you like using your tax refunds as a vacation fund or as your fun money throughout the year. So if you're someone that wants the large refunds at the end of the year, opt out. While we just talked about reasons to log on to the IRS website and opt out, there are cases where you might want to intentionally not opt out, even if some of these circumstances apply to you. Whether to stay opted in or to opt out is extremely situational. If you have questions, reach out to us. We can walk you through what would be the best plan for you and your family.